Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, TGIF, everyone, and it's March 9th. So this is a day we had talked about regards to the big economic news releases scheduled. So basically, it's all jobs related. So we'll jump right into it, and we got the non-farm payrolls, and these are brought to you by the Bureau of Labor Statistics by the government. So this is for the month of February. Last month was actually revised higher, which was good. So that means 284,000 jobs were created last month, or actually for January, excuse me. And then they were kind of forecasting about 213,000 jobs, kind of right around the number what ADP brought in on Wednesday. Actually exceeded it. So 227,000, they even exceeded what ADP reported. So good news on that front. So obviously the market's going to like that. Unemployment rate at 8.3% has at that, and basically its forecast remained the same, and it did. So no change on the rate, but good news on the jobs as we increased January's, as well as we still had a good number and higher than expectations for February. So good start to the year. Now we got average hourly earnings for February. So the previous month for January, people were given like a 0.1, saw maybe about 0.1% in their earnings a little bit. And basically figured it would be increased a little bit to 0.2 was the forecast, and it remained the same. So basically each month went up about 0.1%. So kind of more of a steady. Now the trade deficit for January, we had for December back at negative $50 billion. We figured it would decrease a little bit by about $1 billion, and actually went upward. So we actually worsened ourselves by a little over $2 billion, went more in the hole. So that's not obviously great news. We need to kind of work on that in this. So obviously our trade deficit went in the opposite direction. Wholesale inventories for January. We had for December up 1.1%, and basically it looks like people kind of pulled back for January. So, for January. So they kind of stocked up for December, but they decreased that demand in January. So let's jump over to the headline news today and see the stock market is basically up across the board. And one of the things to kind of note is investors still kind of watching Europe. They believe the Greece things kind of it's running its course, that they got the agreement what they want, so they'll get past this hurdle. But there's, they still need to follow through with what they promised, and I guess past history has kind of shown that it's been mixed results in that area. So they want to make sure that everything follows through as they say. Of course, they still have to watch the other countries, but right now, as of Greece, they are kind of watching this scenario closely as to, that everything works out. Work its way out. So let's go ahead and see what the bond market is and how that's translating to interest rates. Yesterday we had a drop in the market. We dropped below the 10-day moving average, which you can see by the red line. And today we had about 30 basis point drop. So we started the day off below the floor, and we have a huge opening gap to the worst. And right now we're up about 9 basis points. So interest rates are up today compared to they were yesterday or this week. I think I mentioned on previous recordings that I was kind of expecting good jobs numbers and to lock in if you guys had any loans out there to lock in, because I figured we would probably had more downside to the bond market and probably will see increase today. So I'm glad to see glad to see that we got good numbers. So I'd rather trade in interest rates, good interest rates for a better economy where people are working and stuff, and be able to make money and stuff. So I think we all would kind of agree to that. So anyways, folks, you guys have a wonderful weekend, but interest rates did go up a little bit based on the good economic news release that we did schedule today. And if you guys are on Mike's Daily Market Report, stop on by if you're not there, and subscribe, get your free daily updates. Have a good weekend.